The U.S. dollar rally of recent weeks has been positively relentless. It has continued to drive and just steamrolled right over other major currencies, over gold, over the yen, over the euro. There are signs, however, now that suggest that the U.S. dollar may be nearing exhaustion and could be setting up for a more longer-term pause or even a correction. And from this, I look to the momentum indicators. It's not enough to just say that something's become overbought, oversold, because we can see, for example, here in the U.S. dollar index chart, that something can stay overbought or oversold for a while before it has a correction. And if we look here, what we can see is that we had a period here, first one in October, where it got overbought and had a small correction. In November, it got overbought and had a sideways consolidation. It's run up again. It's nearing overbought. But to me, what's more important is that there's a divergence this time. And what that means is usually when you're looking at a momentum indicator like the RSI, the MACD, or stochastics, the momentum indicator should be going in the same direction as the price. If the price is increasing, the momentum indicator should be increasing. If the momentum indicator starts to go the other way, it's called a divergence. It can be a negative divergence at a peak or a positive divergence at a trough. We consider that the momentum indicator leads, and it shows when you get this. For example, here we're seeing we have a higher high in the US dollar index. We have a lower high in the RSI, and what that's telling us is upward momentum is starting to slow, and that it could be getting ready, nearing a peak, and could be getting ready to fall back in the other direction. Also interestingly here, we're seeing a hanging man candle as well, and this could also be a sign here that after 2 strong days where the bulls have really dominated, all of a sudden now we're seeing this start to crack a little bit. And right now bulls and bears are in balance, but definitely we are starting to see some profit taking here. So right now we've got the US dollar index ran into resistance about 103.60. It's hanging just above 103, 103.15. First support is probably in here somewhere in and around 102.30, and then down around this 102 level for the US dollar index. And something to consider with the US dollar index, the reason why it could pause is now all the news is out. The Fed news is out. The markets have had a couple of days to react to it. We're heading into the holiday season where for the next 2 weeks anyways till the end of the year, things are likely to remain fairly quiet. I'm not expecting to see massive reversals just on the basis that there's still a lot of money finding its way back into the market that had been pent-up demand that had been sitting on the sidelines. But I do think we could see a pause and a more moderate correction. In particular, we also could see, based on trading in other markets, that we could start to see that if the US dollar pressure on some of these other markets eases, we could start to see some bounces. And I'll show for example, with the US dollar here. The US euro dollar starting off, not only are we getting a positive divergence here, we had a lower low for euro dollar, higher low for the RSI, but on top of that, this here is a head and shoulders bottom. Very rare, but when you do get patterns in the RSI or the MACD, such as double tops and bottoms, head and shoulders, tops and bottoms, they're very rare, but they're very significant. We really keep an eye on them. So it's looking like the euro could be putting in a fairly significant low here. It found support around 103.60 that has since moved up to 104. We've had an initial rebound attempt kind of fading, but overall it does look as though after 2 days of heavy bearishness that's starting to ease back a little bit, and we could get a trading bounce here in euro dollar. Similarly, we'll look at gold. Gold is an interesting one here because it's oversold for sure, but we don't have the divergence. In fact, gold is actually still confirming the downtrend. So it seems to me as though at this point a rebound in gold could be a little less likely here. It has found some support around 1120. I can't rule out a retest of 1100. First resistance for gold around 1145. The other market I wanted to highlight here is dollar yen. Dollar yen has just exploded upward over the last few months, but now what are we seeing? This is what I mean by can get overbought and stay overbought for a long period of time. But now we've got much higher high in dollar yen. We've got a lower high in the RSI. That's a negative divergence as well, and you can see how it's been up, starting to flatten, and if that starts to roll over, then this also could be a sign that this is starting to roll over. And 2 very strong green candles. Now we've got a doji candle. We've seen dojis here. We've seen dojis in gold, dojis in the dollar index, dojis in euro dollar as well. And that's also suggesting that the bulls and bears are coming into balance, and things could be on the verge of tipping back the other way. Dollar yen could be particularly active going into next week. Tuesday night in North America, Wednesday during the day in Asia Pacific is the Bank of Japan decision. The Japanese economy actually has been showing some signs of improving economic figures lately. That may be more due to the fact that the currency has weakened than due to things on the monetary side, but the pressure on the Bank of Japan to keep up or add the stimulus is easing a little bit. We'll see if they have anything to say about that.